Well, a very warm welcome along to the fourth edition of the Lenders Round Table. This is a collaboration between Property Tribes Financial Services, our mortgage brokerage, and the lending community. And today, on what is an extremely hot day, it's very appropriate because we're going to turn our spotlight to holiday let mortgages. I'm very pleased to be joined by Samantha Turmaine from Property Tribes Financial Services, Emma Saint from Furness Building Society, and Duncan Turner from Cambridge Building Society. So welcome along, everybody. And I'll start with you, Sam, if you don't mind, because I think a good place to start is a general overview of holiday let finance, because certainly in my mind, it's become a lot more mainstream in the last 5 or 6 years. We've seen a lot more lenders enter the space. So you're a specialist holiday let mortgage broker. Could you give us a little bit of an overview?
You're correct, Vanessa, if I'm honest with you. We're seeing more mainstream lenders come into the market. I guess because of changes that have happened over the course of the last 12 months, we are starting to see more lenders open up their channels for limited company lending now for holiday lets. And it's just a case of more and more people kind of still entering into this sector. It's a good investment. It's a business. And I think that's what obviously a lot of our clients are fully aware of the situation. We're just seeing more and more people kind of diversifying their portfolios. You know, our portfolio landlords are looking at not just having the residential sector, they're coming into sort of the development and the commercial sector. So it's kind of looking at the I guess the market as a whole, and more people are looking to go down this road.
That's great. Well, Emma, if I could come to you, Furness Building Society, when did they enter the holiday let sector? And can you kind of give us an overview of your kind of lending to products?
Yeah, absolutely. Yes. So I've been with the Furness Building Society for just over 4.5 years. I can't put a specific date on when we entered the market. However, it's always been something that has been an option. And it is a side of the business that we really like. We tend to find that we get good profile clients that do holiday let business. Obviously, from a lender perspective, they're decent margin, very few arrears as well. So we're very supportive of that market. So from our perspective, we are a regional building society, so we're actually based in the Lake District, but we do national lending, including Scotland. So we do find that obviously there's a limited amount of lenders in Scotland that will actually look at holiday let, so that is quite good from our perspective. Over 90% of our business does come through the intermediary channel. So even though we have a branch base, it doesn't necessarily come from there, which means that we can service everybody all over. And what we find is because of the type of lending we do, we're a manual underwriter. We don't have computer generated decisions. We can actually look at things that are slightly out of the box. So it just offers brokers a different opportunity. If you've got something that is that little bit quirky, you need to have that conversation, looking at potentially pushing the parameters of criteria a little bit. We're a perfect sort of backup plan almost. Mm-hmm. However, we do feature quite well on sourcing. The way that we work from a holiday let perspective is we're quite different to most lenders in the fact that we actually do perform full affordability. So we do need an ICR coverage of 125% of pay rate, which is, to be fair, on holiday lets, it's not obviously as difficult because your yield is higher. And we do look at using an average of low, medium and high. So we do look at things quite differently. But again, it's offering a different style and a different opportunity for borrowers.
Oh, well, that's very, very interesting to know. And coming to you, Duncan.
Yes, I'll just copy and paste what Emma said for a lot of it. I think we are, again, we're a mutual society. We do, around 90% of our business is through an intermediary market. And one of the areas that we found was getting a lot of questions on was holiday let from around. It was the COVID time, wasn't it? There seemed to be the big boost in the market at that point in time, and we decided that it would make sense for us to enter that market at the same time. So that's pretty much the amount of time we've been doing it, for 3 or 4 years. rather than go out there and completely redesign or try and rewrite our, the criteria for holiday lets, we went through and we picked up what we thought were the best parts of everyone else's policies, basically, and said, yeah, that works, and brought it in that way, which is the bonus, I guess, of coming into the market a little bit later. And I think I'm guessing, Samantha, that's what you're seeing with a lot of new lenders entering that space. They are coming up with those, picking the best bits of criteria from different people.
Yeah.
But our ideal client is really, you're looking at people with, generally we're looking at people that are 1 to 3 buy-to-lets that have got a little bit of an idea of what they're doing with a buy-to-let and then going into the holiday let. Having said that, we have just reopened for portfolio in certain areas as well, so we can look at that. But yeah, we're manual underwriting. We can look at things that are slightly out of the box. We do that side of things. We don't credit score, we're searching. So it's about assessing the whole package of a case rather than just do you tick this box? Yes, no, computer says you can have it. Which gives you the ability to look at different properties, different areas. We don't limit, say it has to be a holiday spot or a tourism area. We will understand that Airbnb has taken off in such a way that actually a holiday let package, for example, fits quite nicely with Airbnb for businessmen that are looking to travel and bits and pieces and things like that. So the market is vast, and the ways people utilize holiday lets has changed, I would say, over the last, probably last 5 years, probably longer, on that basis. So yeah, that's kind of a rough overview on that front of what we look at and how we look at things. But yeah, we found that it to be a very good market to be in. We've had very little issues in it. I know we haven't got a huge length of time in there, but yeah, it's been definitely something that's been worthwhile getting into.
Well, I'll just pick up on something you said, actually, Duncan, because many people associate holiday lets with coastal holiday hotspots and the national parks and those kind of beauty spot places. But of course, we have seen a massive increase in city holiday lets. And actually, I have a friend in Chester who has a high-end holiday let, and it is let out all year round because there's footfall through a city all year round, whereas some holiday let spots can tend to be slightly more seasonal. I'm thinking of mainly places like Devon and Cornwall. So it is interesting how it's changed and the space has developed. Sam, we've had our two lenders sort of talk a little bit about their criteria. Most of people watching this are buy-to-let landlords who are used to buy-to-let affordability and stress testing. Just generally with holiday lets, my belief, and please correct me if I'm wrong, because I can be wrong, is that the loan to values tend to be a little bit lower, and the rates a little bit higher. And there are some lenders who will also look at somebody's income combined with the estimate of what the property will achieve through the year. Is that right?
Yes and no, to be honest with you. So most of the holiday let lenders out there at the moment, their loan to values are tight between sort of 75 to 80%. So the same you would see on a normal investment proposition, a buy to let. The way that the income is sort of looked at is where the changes come into fact. So as obviously Emma mentioned, it's done on a seasonal basis over the low, the medium and the peak figures. And then that could potentially be, depending on lender, averaged over 30 weeks or 36 to 38 weeks, depending on where we are. Kind of the main things from our point of view is, from an investment proposition, it's kind of understanding trends, demands of areas that you're in. As you mentioned, Vanessa, the city kind of has now opened up. We see more and more people who are looking at investing near, attractions that is near them. It's not just a case of it has to be on the coastal towns or the Lake District or the Peak District. I had a lovely lady who was in a fishing hotspot, and that worked for her, because she was getting footfall. But what I guess also helped was she had an existing buy-to-let and a holiday let, and she converted her buy-to-let into holiday let because there was more demand in the area that she is. So it can easily be done, and conversions can obviously be looked at if you've already got experience. But, you know, there are some lenders out there that are happy with first-time buyers, first-time landlords.
Well, that's interesting that you said people convert, because they do. And I think a lot of standard buy-to-let, single occupancy buy-to-let landlords have been converting to holiday lets or serviced accommodation because of Section 24, which is interesting because earlier this week we had the new tax regime published by the Labour government, and it has set out a direction of travel for how the holiday let regime is going to, how the new regime is going to be for holiday lets. Sam, should we be worried by what the government has indicated so far? Because it's not set in stone yet, is it?
No, there's still a consultation up until September this year. So we are saying to, you know, anyone that's obviously looking to get into the market, already in the market, to still lobby with their MPs and their local authorities, because it is a business ultimately, rather than a second home, or, you know, so we're kind of saying, you know, there's still that open discussion to take place. We have kind of been indicated that CGT might be on the up in the October budget, but the tax regime still, I guess it's more a case of, it's not set in stone until April 2025. So we've still got a bit of time to get, I guess, a more direct coverage of the legislation. We know at the moment, in reality, unclaimed capital allowances and retained losses can be carried forward. We're not sure much more than that at the current moment in time. But again, you know, I think until we get past the budget, we're going to get a bit more of a clearer indication of where we currently sit.
Well, thank you for that. And I will put a link below this video to the government announcement about how they're going to change the tax regime of holiday lets. So you can go and have a look at that for further information. To our lender guests, do you have any kind of indication of how many mortgages you're raising through a sole trader format or compared to a limited company format?
From our perspective at the Furness, we actually only offer in personal names.
Okay.
So we only do buy-to-let and holiday let in personal names. It's not really an option. I suppose it's been one of those things that we've actually questioned for some time, actually, whether it's a market that we wanted to enter into. With the way that we calculate affordability on both sides of the spectrum, we've kind of shied away from it because we do like people who have got the independent income and then they've got the rental income and property income on top. However, with these potential changes, certainly know from feedback from brokers, a lot of the inquiries do seem to be heading down, such as using limited company in order to actually purchase. Mm-hmm. So it'll be interesting to see which way it goes forward. I think there's some opportunity there for lots of lenders.
It's sole name at the minute. Will we get there to limited company? We will. I wouldn't want to give you a timescale on when that's going to happen for us. I've been bitten by that one before.
In relation to rates, you will find that the personal name is a little bit cheaper than the limited company because of the perceived risk. But, you know, I think that disparity will obviously change as time goes by. I think because we are going to be looking at more and more people going down that route, you know, I think lenders will look at their criteria in a bit more detail.
Good. Well, it's good that the sector is expanding. It's more choice, more competition, and that's always a good thing. I'd like to dig a little bit deeper on how lenders assess the occupancy of a holiday let in terms of when they're doing the underwriting. Do you work closely with some of the big names like Sykes Cottages and get kind of data from them, or do you have local surveyors on the ground who have a good idea of the occupancy that can be achieved throughout the year? I'm quite interested how you assess that.
Yeah, so we don't directly work with the major names at the moment. You know, we are in discussions with them to potentially create a link together. But at the moment, I think it's because depending on areas, some of the online travel agencies won't actually give figures for areas they're not interested in. So we tend to sort of ask our clients to go out and speak to, you know, some of the bigger names to kind of get a rent to estimate letter of what they feel that particular property would generate. We don't want sort of hypotheticals in reality, because we have had some local estate agents that have kind of given us this what we think it might be in the area. However, they've gone out to someone that's a specialist in that, and the figures quoted vary wildly. And it actually could have put our client in a worse position if he hadn't gone out and double checked that with somebody that kind of knows their field, let's put it that way round. And it's just a case of, you know, once we've got those figures, then we can work out affordability, you know, according to the lender's criteria.
Have our lender guests got anything to add about how you assess the occupancy levels?
Yeah, so as would be the same, as part of our packaging requirements, we do ask for a specialist letter. So somebody who's in the holiday let sector, like you say, Sykes, Airbnb, just to give us those estimates for low, medium, and high, because ultimately they're potentially who's going to be actually letting the property. We work on average of the 3 over a 30-week period. We do actually offer 90 days personal use as well. But we obviously the property has to be valued, so it's always subject to valuation, but we are very much, let's use what the specialists are saying. When it comes to a remortgage though, if we are struggling, because obviously if the property is being occupied, it's currently being rented, they've got bookings back to back, it may be that we struggle with that side of things. So we can look at how much the property has taken in the past couple of years, for example, looking at SA 302s, perhaps a statement. So we're quite open to working with the client, but particularly in a purchase side of things, we would be requesting that letter.
Okay. Well, that's interesting. We've talked a little bit of some of the trends that we're seeing in the sector, and I maybe come to you for this, Duncan. One thing I feel has been a trend over probably the last 10 years is that holiday lets need to be done to an extremely high standard of finish. The days of a rather unloved bungalow by the seaside with, you know, dank curtains hanging at the windows and a lumpy mattress. I'm talking of a holiday let my parents went to, where there was a hole in the bathroom with the wind coming through, and my dad fell out of the bed because it wasn't straight and it was so lumpy they couldn't sleep. So I believe that people have the marketplace demands a very high standard of finish and furnishings, and is that something, I guess that's good for you as lenders, because everything is done to a very high and professional standard, and that reduces your risk?
Yeah, I think any time where you've got a market that influences your securities in a positive like that, it's a good thing for a lender. You know, we're in a situation where we're securing our funds against the property, and if it's being looked after brilliantly, because the market demands it, otherwise it's not going to be filled, then that's fantastic for a lender. I use holiday lets myself quite regularly, being an avid walker in the lakes, etc. So I know that you look for that quality in the property when you're looking for them through the pictures initially, and then you're starting to think and you're narrowing it down. So the more facilities that they've got within these properties, the better the finishes are, the better looked after they are, the better the yields are going to be at the end of the day. And from a lender perspective, as the security goes, it's fantastic that people are, constantly getting feedback as well. The key thing when you're looking to go to a holiday let is you're looking at the feedback. What have they said about it? Is there anything good or bad or anything like that you're picking up on? And as an owner, if you're owning the property and you're getting feedback saying, well, actually that window's drafty or this, that, and the other is a problem, you're going to fix it, because you don't want your business to be affected by that. And again, from a lender perspective, fantastic, because we know that that's being looked at on a weekly, daily, whatever it is, basis, rather than every 3 or 4 months or 6 months, whenever the rental inspections are due on a standard AST. So it from a lender perspective, fantastic.
Yeah, and I guess, Emma, as well, that holiday lets do tend to be in areas where I describe it as having robust capital growth. I found with my holiday lets, which are on the south coast, they didn't go down during the kind of financial crisis. They stayed fairly, stable, and they have capital appreciated very, very well. So that's also good from the lender perspective as well, that these properties tend to be in areas where there's not too much worry of corrections.
Yeah, absolutely. Yeah, there's some beautiful areas in the country, and we know that obviously the market is still vibrant, isn't it? As we've all said, we probably all have used the holiday homes, Airbnb previously. I think that there's also the opportunity there as well. So you do get people who are looking at buying properties that potentially do need a little bit of TLC. So they need to invest some money in, perhaps even, I don't know, do a remortgage, capital raise to improve the property. And again, that's quite positive, because if you've got somebody who's willing to do that little bit of work to make it premium, then obviously if it's going to fit at the moment on the high, medium and low, and the rental figures fit, but they can be improved by somebody improving the property, then that's even better as well. Certainly seen some beautiful ones out there recently.
Fantastic. Well, I'm a big advocate of starting with standard buy-to-let portfolio, building up your net cash flow month on month. And once you've done that, then think about diversifying into something like a holiday let. I think they're a great addition to anybody's portfolio. I'm certainly very happy with mine. I guess just as we close this out, has anybody got anything they would just like to add that they don't think we covered, or anything? I think, we should also always point out that you must use the correct finance for the activity that you're undertaking. So you wouldn't get a buy-to-let mortgage and then start doing holiday lets or serviced accommodation. So it is very important to be clear and truthful with the broker about the activity you're going to be undertaking in the property. But anybody got any other little things they just want to say before we close it out?
The only thing from me, and you've obviously just quickly highlighted about having the right finance, it's also making sure that you have the right insurance as well. So you obviously, the things to bear in mind is, because it is a full through of guests, you're going to have it for that short-term rental period. You need to make sure that you've got the right cover for that, because you might need accidental damage, you might need PI cover. There's going to be various different bits and pieces that you're going to have when you're buying these types of properties. And we have seen instances where they have the right finance, but they don't necessarily have the right insurance. They've had to claim for whatever reason, but it's not paid out because it's a standard buildings and contents. So I would always highlight, when you are speaking to your finance professionals, that you're making sure that they are providing you with the right information from an insurance point of view as well.
Good point.
Yeah, very much. I would very much echo that. Really, conversation, it reveals so much. Whether it's BDM to broker, or whether it's broker to client, those conversations really make a massive difference, and they push you down the right paths. Something you touched on earlier is that making sure you got the right finance for the right, or what you're doing, whether it's holiday let or buy to let. It is important. It's vitally important. As a lender at the Cambridge, we also recognise that things can change. And if you're in that situation where things do change and you need to change the style, or look what you're looking, or whether it's changing it from holiday let to buy to let or vice versa, it's always worth a phone call. We will have that conversation with you and be able to work out a way of doing something for you to try and help. So if you get into a situation where things change, it's best not to hide it. It's best to come out and have that conversation as early as possible, because it gives you all the options available to you. And that's one of the things that I'd say is probably something that's been highlighted over the last 2 or 3 years in not just in holiday, in other things as well, is those conversations. The earlier you have them, the far better things happen.
Yes, I think that's very, very good point, Duncan. Thank you. Because things can change. Life can throw curveballs, and as you said, the sooner that you ask for assistance and get advice, the more options are open to you. So thanks you to everybody for being on the Lenders Roundtable. Been really interesting talking about holiday lets with the sun shining and it's roasting hot, and I've got a fan on me, so I was melting, and it just seemed appropriate that we had this in-depth look at an area of finance that's definitely growing, which is great for holiday let owners. So thanks to everybody for taking part, and I'll put some links underneath the video to direct you to some of the areas that we've been talking about throughout. But for now, thank you to everybody for watching, and thank you to my guests.
Thanks.
Thank you.